Hello and welcome to another update video about FET. So FETCH.AI still pushing higher, no signs of weakness, is now basically in the middle of this target or resistance area. And here we now need to see, can we form or can FET form 5 waves? So the idea was that the move up of the November lows here to the February highs, that this was a 5-wave move, a wave 1. So that potential impulse, okay, then wave 2 correction to the downside, which could have finished in our trend reversal area. Didn't go quite deep into it, but that's okay. It reversed where it needed to eventually. Now, due to the fact that it didn't go very deep, it is possible that this is now only an ABC structure. I need to highlight that. That's basically the bearish scenario. For risk management purposes, you need to know about this. Basically, it would indicate we only rallied here in an A wave, came down in a B wave, and we're now moving up in a C wave. The thing is, we can even draw it differently. We could say, okay, this was maybe the A wave, this was the B wave, and then, yeah, we are also running in the C wave. But then looking at this, the C wave might even get another higher low and another higher high. So it wouldn't be, it would still, even if we push above resistance, it could still be the C wave of wave B. Just be aware of that. B waves can also overshoot. So what we want is a crystal clear 5-wave move, okay? First of all, we need to see, however, in the white count, can we form a 4 and a 5, and do we maybe get another higher low and another higher high? That's what I'm watching for. We obviously talked about the beginning of the uptrend here. That was, I think, last Wednesday, Thursday, and that was definitely on time to make you aware that we're on track to reaching, first of all, our resistance area. And you can see that we're currently facing some problems to get above the golden ratio. So resistance is respected, but we don't see a strong rejection. So I think the next level to watch is 46 cents. I would not be surprised if the price gets there. And if we break above that, that would not rule out a B wave, believe it or not, because they can overshoot. What I can show you here with these areas is really only standard resistance for a B wave. The problem is B waves don't really have targets. They are among the most difficult waves to really forecast. Okay, so they can easily overshoot. It means we don't want to get, from an analysis perspective, too bullish too early. However, I'm telling you the trend is up, and I told you already last week. So grab it by the horns and just trade the trend if you want to participate in the trend. We know that cryptos can extend higher than you would initially think without a pullback. So just be mindful of that. Just be aware of that. And yeah, I mean, if this is circle wave 1, what would be an ideal target range? Maybe we can just repeat that. So what we do is we take the length of this wave 1, the larger degree wave 1. We go to the low of the wave 2, the presumed wave 2 low. And then we're watching here, first of all, the 42.4 cent level. Now, we haven't got 5 waves, so this would not be enough really as a target. Okay, we want to have 5 waves filled, ideally before reaching 75.5 cents. This would be ideal, getting 5 waves filled before breaking that level. Okay, above that level, we still have $1 as key resistance structurally, and $1.14 as Fibonacci level to watch for circle wave 1. Anything above that would rather be bearish, okay? Because then again, similar to Bitcoin, I mentioned that in the Bitcoin video, the bearish scenario, this move up has the same length as this move up. That could be bearish, ABC, and then we break down again. At least it risks, it's an increase in risk, which means that as we go higher, we need to watch 3 key levels, even though actually I would nearly ignore this one here. That's not high enough because we might have 3 waves complete, but not 5. And the space doesn't, it's not sufficient. So the 61.8 extension at 75.5 cents is the level to watch above 46, in my opinion. Yeah, okay, we've got this structural resistance here as well at 55 cents we want to get above, but from a Fibonacci point of view, 75.5 is important. Then the psychological $1 level, of course, and then $1.14 is going to be absolute relevant, because anything above that will, in my opinion, reduce the likelihood of the white count. And yeah, it would be short-term bullish, don't get me wrong. You could see it a bit as a breakout. The problem is, if it then reacts to $1.92, this could just be a larger ABC structure. So when we get there, at least it's a bit of a warning to prepare for potentially a little bit of a bearish outcome, okay? It's also not guaranteed, but it's just a warning that we want to take seriously, so we can only track the ideal structures. yeah, that's my update about FET. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.